Welcome to our deep dive into one of India's most promising pharmaceutical players, Sai Life Sciences. As the Indian healthcare sector evolves, the Contract Development and Manufacturing Organization, or CDMO space, has emerged as a goldmine for investors. Sai Life Sciences, often referred to as Sai Life, is a powerhouse providing end-to-end services for global biotech and pharma innovators. With its recent buzz in the public markets, it is crucial to understand what makes this company a standout. We'll be analyzing its business model, financial health, and long-term potential. Whether you are a seasoned investor or a professional in the pharma space, understanding Sai Life's trajectory is key to grasping the future of Indian drug manufacturing. Let's explore why this company is capturing the attention of the global investment community. What exactly does Sai Life Sciences do? They operate as a CRDMO, a contract research, development, and manufacturing organization. Unlike traditional generic manufacturers, Sai Life partners with innovators from the very beginning. They support the entire life cycle of a drug, from the initial discovery phase in the lab to large-scale commercial manufacturing. This discovery to commercialization model creates high switching costs for clients, meaning once a pharma giant starts with Sai Life, they are likely to stay for the decade-long journey of drug development. This provides the company with a stable, recurring revenue stream and a deep integration into the global pharmaceutical supply chain. By focusing on complex chemistry and high-value services, they differentiate themselves from low-margin competitors. Sai Life Sciences isn't just an Indian operation, it's a global one. Headquartered in Hyderabad, the company has strategically positioned its R&D and manufacturing hubs across the globe. They have a state-of-the-art research facility in Manchester, UK, and a business development hub in Watertown, USA. This global delivery model allows them to stay close to their primary customers, the big pharma and biotech firms in the West, while leveraging India's cost-efficient, high-quality manufacturing base. Their facilities in Bidar and Hyderabad are world-class, adhering to stringent US FDA and EU standards. This infrastructure is a massive entry barrier for new competitors and serves over 100 global customers, including several top-tier pharmaceutical companies. Let's talk numbers. Financial discipline is the backbone of Sai Life Sciences' growth. In the last fiscal year, FY24, the company reported a robust revenue of approximately 2,434 crore rupees. What's more impressive is the growth trajectory. The revenue has seen a significant compound annual growth rate over the last 3 years. The EBITDA margins are healthy, reflecting the company's ability to manage costs while scaling complex operations. While they have invested heavily in capital expenditure to build their new R&D centers, the return on capital employed remains a key metric for investors to watch. As they shift from discovery-heavy work to commercial manufacturing, we expect to see further margin expansion, making the stock an attractive play for those looking for growth at a reasonable price. What drives the engine of Sai Life? It is their people and their technology. With a global workforce of over 2,500 employees, including hundreds of PhD scientists, their intellectual capital is their greatest asset. The company is currently benefiting from the China Plus One strategy, where global pharma companies are diversifying their supply chains away from China and looking toward India. Sai Life's expansion into new therapy areas like oncology and high-potency APIs is a major growth driver. Additionally, their focus on digitalization and green chemistry is making them a preferred partner for ESG-conscious global clients. By staying ahead of technological trends, Sai Life is positioning itself not just as a service provider, but as a strategic innovation partner. The macro environment for Sai Life Sciences is incredibly favorable. The Indian CDMO market is projected to grow at a CAGR of 12 to 14% over the next few years. This growth is fueled by increasing outsourcing from big pharma to reduce costs and accelerate drug time to market. India's advantages include a vast talent pool of chemists and significantly lower manufacturing costs compared to the West. Sai Life is perfectly positioned to capture this tailwind. As global biotech funding stabilizes, we expect a surge in new molecules entering the pipeline, which directly translates to more business for CRDMOs. The shift toward complex biologics and specialty medicines further plays into Sai Life's strengths in advanced chemistry and specialized R&D. No investment is without risk, and Sai Life Sciences is no exception. The pharmaceutical industry is highly regulated, Any negative observation from the US FDA or other regulatory bodies at their manufacturing sites could halt production and impact the stock price. Secondly, there is client concentration risk. A large portion of their revenue comes from a handful of top global clients. Losing one could be significant. Furthermore, the CDMO space is getting crowded, with players like Syngene and Divi's Labs competing for the same contracts. Currency fluctuations also play a role, as most of their earnings are in USD while costs are in INR. Investors must weigh these regulatory and competitive risks against the company's strong growth profile. In conclusion, Sai Life Sciences presents a compelling case for investors looking to play the Indian pharma growth story. With its end-to-end CRDMO capabilities, global footprint, and strong financial foundation, it is well equipped to handle the demands of modern drug discovery. While the valuation at the time of IPO might seem premium to some, the long-term growth prospects in the CDMO sector justify a closer look. If you are looking for a company with a high moat through technical expertise and deep client relationships, Sai Life is a strong contender. Always remember to consult with your financial advisor and consider your risk appetite before investing. Thank you for joining our analysis of Sai Life Sciences, the bridge between discovery and a healthier world.